Hello, everybody. Welcome. My name is Bennett Tchaikovsky, and today I'm going to give you a preview of my homework packet for cash and accounts receivable. So my disclaimer and copyright notice, the information contained and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2025 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Note that this presentation will refer to companies and other parties, third parties. I do not claim any copyright belonging to those third parties. So let's go through and kind of take a look at this one. So basically, and again, you'll see me kind of put this over here, and this is a really just an absolutely important thing in terms of learning about accounting. And this was recently reinforced to me when I had a conversation with the founder of Ninja CPA Review, talking about the importance of physically handwriting parts out. What you'll also see over here is I also have links to basically the PowerPoint presentations for bank reconciliations and accounts receivable. So in lower division financial accounting, we really kind of look at cash mainly from the perspective of talking a little bit about internal controls, meaning that, oh, if I'm at a register at a store, should I be the one who's collecting the cash from the customer, counting it up and depositing it? Now you want to have like something called a segregation of duties, separation of duties, whereby different people are doing those functions. So we're basically okay with how everything is going through and being counted. Now, one of the other kind of things, though, also with this particular chapter is I would probably say one of the most important things is going to be the bank reconciliations. And what I've tried to kind of go through and do, and this is one of my former students, Sonari, who is now licensed as a CPA. She's doing amazing. But I've tried to come up with every single possible scenario, basically, that you could face when doing a bank reconciliation. And what I would probably tell you more than anything else when you're doing these questions is just to really make sure that you're going through saying, here is the book balance, here is the bank balance, what do we need to adjust, going through to get these to equal up. You will sometimes find these written in different ways, but if you kind of abide by these different concepts, you should be in pretty good shape. Now, the other thing too is when it comes to doing journal entries, right? For basically, we are going to only do them for the books. We don't care about Wells Fargo, which is opening up extra accounts for us as we speak. Just kidding. Maybe I'm not. Maybe that happened a few years back. Who knows? But as I'm going through and looking at this over here, what you're always going to be basically either debiting or crediting cash, depending upon what adjustment you're going through and making. And again, the key is there's only a certain number of these different items that I can kind of go through and come up with, right? So that's how I go through and teach cash. Also in the Google Sheet specifically for this particular segment, you'll find a lot of different videos here in terms of bank reconciliations, accounts receivable, comprehensive accounts receivable questions. So you're going to see, and also different shortened basically video series. Now, when it comes to accounts receivable, right? When it comes over here to our accounts receivable, what you're going to notice is, well, on our balance sheet, right, we're going to be showing over here, we have our accounts receivable on our balance sheet as of, let's make it a date, 12/31/25. Now, when we show receivables on our balance sheet, we need to make sure that we're telling our investors that this is what we as management, this is what we expect to collect. So oftentimes we do make, basically when we make sales, we may not be able to collect the money, bankruptcy, other things like that. So what we're going to use is we're going to use a Contra asset account, which is going to be called the allowance for doubtful accounts. And again, this is going to be a contra asset account, very important to remember. So when we have this over here, you're going to have your accounts receivable. And then over here, you're going to have your allowance for doubtful accounts. Now, this is typically going to have a credit balance, right? Because it is a contra asset account, right? Assets over here will typically have debit balances. This is going to have a credit balance. And so this is going to give us accounts receivable net. When we go through and do this, right, when we're going through and doing these problems, there's a few different ways to go through and determine the ending balance and the allowance for doubtful accounts. We can use basically something called a percentage of accounts receivable. We can also use something called based on a percentage of an aging of accounts receivable, meaning we're going to take those receivables, categorize them into different days, and then say, well, the ones that are going to be more recent are probably going to be more collectible than those 120 days from now. So we're going to learn how to go through and set those up. There's something called the direct write-off method, right, which is used in cash basis accounting, but not even necessarily that, because you're going to never really record that sale because it's cash basis. But we do not directly write off receivables to bad debt expense. What we're going to learn is we're going to basically use bad debt expense at the end of the accounting period to go through and make that adjustment. There is also a methodology called a percentage of credit sales. I do not teach, though, that methodology. And here's the reason why. I actually saw someone, I think it may have been from the FASB years ago. And when you look at that methodology, you're kind of saying, well, it might be an easier way to go through and do it. But in reality, you really want to take a balance sheet approach when it comes to looking at accounts receivable, meaning that I need to convey to the investor, this is how much I expect to collect. And so the way I'm going to do that is by looking over here at the allowance for doubtful accounts. So what you're going to find is on all of these different parts over here, a lot of different accounts receivable questions, multi-year questions over here, additional practice problems, right over here for you to kind of go through and work through. And again, the more practice you get, the more effective you're going to be in terms of going through and preparing. What I also have over here are basically some just kind of talking about different accounts receivable balances. And, really this is just to kind of give you some more just kind of like basically a background into this. But as you're kind of going through and seeing what we're kind of going through here and doing is we started out when we were looking at, we started out in financial accounting, at least with recording transactions or doing basic items. Then we went to adjusting journal entries. Then we explored inventory. Now we're doing cash. Next, we're going to be doing accounts receivable. And then lastly, what we're going to be going through and getting into is going to be getting into non-current assets, which are intangibles, property, plant, and equipment. Then we're going to flip over to liabilities and then equity. And then lastly, we're going to get into the statement of cash flows. But again, a lot of videos here for you to go through on. Also, don't forget about this, the AI application, basically for financial accounting. And again, this is something that's being used using all of my, all my different lectures. So what are the methods to determine the allowance for doubtful accounts? So make sure if you have questions on this stuff, feel free to go through and ask AI, percentage of AR, and then you've got over here, aging of accounts receivable. And so this is really what I kind of go through and do percentage of, but yeah, this sounds exactly like me. So yeah, this is really what you want to kind of go through and do when you're going through and looking at these different questions. And if you have any questions, please feel free to always ask me. In these YouTube videos, I am gonna, if you want a copy of this, or if you want to send you links to this, I'm more than happy to do so for your own personal use to kind of go through and practice. But in any event, I look forward to seeing you on the next video. Have a great day. And if you've had success with using these different packets, please feel free to reach out. So have a great day. Remember to like and subscribe, and I will see you on the next video. Have a great day.